Welcome, everyone, to another edition of the Tony Sirianni podcast. I'm thrilled to have our buddy Jim Gold, the CEO of Steward Partners, with us. Jim, thanks for being here.
Thank you, Tony. Always good to spend time together.
It is. And I think you're in Florida. I'm in Nantucket if people are curious about the background. So cold. I'm wearing, this is a thick fleece shirt in June. So FYI. Um, hey man, you this has been a record year for Steward.
Yes. Yes, it has. Yeah.
Congratulations.
Thank you.
Any thoughts around it? Because it's been a goofy year with the markets. You know what I mean? I think it's funny because if you remember in COVID, my initial thought when COVID started was nobody's going to move because you need to shake hands. You need to see somebody. Of course, that didn't stop it. So movement seems to be tied to, a time of life for advisors and things that they need right now. And, you stayed relevant all that time.
Yeah, no, absolutely. Yes, I think it's a combination of you have continued recruiting. You also have our new M&A division, which has been a meaningful addition to how we are able to affiliate folks with Steward. I would say as a salesperson, I want to give you as few chances to tell me no as possible. And back in the day, we'd run into someone who says, "Well, I'm at a point I want to monetize my practice," and we just didn't do that. So it's great to have that as well.
Let's unpack that a little bit. So talk about, how that's working. Look, it's also good for the firm too, because, and we'll get into all these things, right? But Steward Partners are equity owners, and the value of the equity of the firm goes up too when you're involved in M&A stuff, right? So that's just a common theme.
Yeah, I mean, listen, for us, it's sort of it's the overnight success story that took about 3 years now. So we really looked at the M&A space probably 3 years ago, myself and High, and really thought about, if you look at the demographics, and the numbers are staggering, where something like 70% of all assets are in the hands of advisors over 55.
Yeah.
Cerulli's forecasting that half of those folks are retired in the next decade, and 75% of them are retired in the next 15 years. So if you ascribe to those numbers and you believe those numbers, I sat back and said, so basically wealth management is going on sale, and you need to have a vehicle to capture that opportunity. I refer to it as a succession crisis, because I think it is. If you look at, there are more 70-year-olds in production than there are advisors under 40 in production. So think about those numbers.
I wasn't aware of that, but I mean, it makes sense based on what you're constantly, seeing.
Right.
Also advisors need a home and a path forward. So it's not just money, because there's a lot of people with money out there. So it's a question of, in other words, the story is still appealing. So I guess I'm wondering, how do you adapt the story to sort of the M&A piece, where it still makes it appealing, because there's a lot of money stores I can go to. Why am I choosing this one to go?
Right. Yeah, listen, I think we're very fortunate that our first transaction involved a group called Freedom Street, which was led by Scott Danner and Val Rivera. And
nice
not only did we acquire the business, we acquired, the team joined us to help us build this out and run it together. Look, I think we do M&A in a very Steward way, where we talk to many folks and they'll say, I'm talking to some of your competitors in M&A, and the minute I get there, the Sirianni group is no longer exists. That name's gone. I run model portfolios today, and I'm told that I can't do that after 18 months. I'm getting a 2-year employment agreement. I'm not sure what happens after 2 years. And I said, well, I can tell you what's going to happen after 2 years. You're fired, because that's how they make their margin back on the business. So I think when we look at it, we do M&A in a Steward way, which is to say, we really have two disparate groups. One is saying, hey, I'm 65. I haven't really planned for succession. I want to monetize what I've built, and I want Steward to help me with my succession in the next 24 to 30 months, let's say. Totally separate group would be what we refer to as sell and stay, which we embrace that, which is very unique, is saying, so we've had some significant teams come in where they have 3 G1s in their late 50s, early 60s, and then 3 G2s in their late 30s. And they're looking for the right home for the practice, the right future for the G2s. And we embrace saying, hey, listen, all of you come over together. If the G2s are capable of running the business in 3 to 5 years, that's great. We're happy to support them, have them continue to run it. So there's not this forced exit when you're dealing with Steward. And I think we want to reflect that, look, people are proud of the brand they've built, they're proud of the business they've built. And it's very disturbing to think about yourself being sort of vaporized off of your own business, even though you're
Let's
monetizing it.
let's talk about that a little bit because I've often said that there's an element of the cobbler's kids have no shoes with advisors where they know enough about how M&A might work to be dangerous, but they don't really know, and they don't want to ask questions sometimes. Maybe they're embarrassed, or maybe they think they know, but they don't ask. Are you finding guys who get themselves caught in situations like, Jim, help me get out of this, or how did I get here? Or, do you see some of that with guys kind of not knowing what the deals really are?
I think with the sell and exits in particular, because those are folks that are really thinking of a 2.5 to 3 year timeline.
Yeah.
And so there is an urgency in their mind of saying, hey, I got to figure this out quickly. I want to make sure that I'm leaving my clients in the right place, right, which is a critical component of this whole conversation. So I think the ability for folks to look at the numbers, but it's also, how much of it do you retain, right? There's tax advantage ways of doing this. There's tax disadvantage ways of doing it. Selling it to your wirehouse is all ordinary income, and you've now chained your clients to that firm for all eternity and your team. So many, many folks, when they sit back and they ponder that outcome, they're not really feeling great about it.
Yeah.
So we're seeing this trend I refer to as breakaway M&A, where advisors are breaking away to do this. So it's not just acquiring RIAs and independent firms, which we're doing with great, frequency. We're seeing the breakaway trend as well following. And I think that goes back to our lineage, as we're known as a breakaway advisor firm. So you just sort of took the W-2 chassis and then took the M&A on top of that with a blowtorch and welded them together. And now you have this, growth machine.
Right. Well, it's actually, like I said, it's super interesting because there are so many choices out there, for advisors. And I think the thing with Steward, for me has always been, we've created a familiar home for you. I mean, this is something you're going to be comfortable in because, we have offices, so I think that's an interesting twist on the M&A thing. Most of the M&A stuff that you see exists around what you said before. Folks who are not in this business at all, who are coming in and seeing, and sometimes they realize, I thought I was buying a football team. I bought a baseball team where everybody could go do what they want. And there's always some surprise on both the purchaser and the buyer, right? The buyer and the seller when they get in those things.
Right.
Well, how does this affect the equity of the firm? Because that's been a big part of it. And I think we also realized 12 years ago, right? Or whatever, 13 years, whenever it came out, the idea of a partnership wasn't, something that was being done all over the place. It was done back in the 70s, then stopped. So, having partners in equity was a story you had to explain to people 12 years ago. Today, everybody's talking about it. I'm curious how the equity has evolved or how you're talking about it has evolved to sort of accommodate this new, M&A piece.
Yeah, I think the equity, it's interesting. I think the equity is a different conversation, especially in M&A, where most folks will say, whatever the value is for the practice, they'll say, well, everyone else is talking about a 100% cash deal. And we believe we always have that everyone should be a shareholder. So I think when they start to understand the power of the equity, the wealth creation of the equity, the ongoing income from the equity, I mean, we distributed almost $5 million in profit sharing to all our partners last year. So it's a really powerful message when you understand it. And I share with people things like, when Sinosure invested, which was 6 years ago last week, we were an $8.5 billion asset firm. We're now at 42 billion, knocking on 50 billion by the end of the year. So when you start extrapolating out these numbers, and the interesting part, as you talked about earlier, Tony, is we continue to have record years. We're having our best year ever. Last year was our best year ever. The year before that was the best year ever. So most firms, as they grow, their growth tends to slow. Ours is actually accelerating.
Yeah, I mean, there's almost, as a practical matter, there's almost an unlimited opportunity. I guess that brings up, is there a top for Steward? Is there a point when you can't really do this the way you want to do it anymore? Another, because you've got a cultural thing, right? You and High developed this thing. It had a strong base, and you built it into something.
Yeah.
And is there a point where you, like, even doing this M&A stuff, you said do it the Steward way, which I love, because we always had Legg Mason, we always had a Legg Mason way of doing things, right?
Right.
You figure out the best way to do it that fits it's got to mesh with your, cultural
Yeah.
personality, your values.
Right.
So how do you keep growing and keep the values steady? I think that's a challenge, a genuine challenge.
Yeah.
I think a lot of people are facing it. And, I would ask about it if I was coming to Stewart.
Yeah, listen, we do, and it's always a topic in every board meeting is how's the culture, how's morale. I mean, we have over 14 committees at the firm, which are really put together by advisors. We have an administrative council as well. Many of our board members serve on these committees, which is amazing. So there's a real, open window of communication. We just had our national conference about 3 weeks ago, and I think there was almost 500 people there. So
That's great.
we have a full afternoon of Steward only, sort of a shareholder meeting, and the entire management team's on the board, microphones passed around the crowd. Then the board comes up on stage, does the same thing. So many board members are there for 2 or 3 days. So there's not this opaque world of Steward that you can't figure out what's going on. And I would tell you that the morale and the culture we heard was biggest and best conference ever, best content, morale is through the roof. Because look, there's a personality that opts into saying, I want to be a partner somewhere. I think they tend to be less mercenary people that think that way. So I think you create a culture of the right people. But you touched on something earlier, Tony, which is another amazing stat. Despite all the M&A done annually, there are more RIAs at the end of each year than there are at the beginning. So it's like this pond, you're fishing in this pond that stocks itself overnight when you go to sleep. So the opportunity is just massive. It's just massive.
Yeah, advisors are voting with their feet. They're voting with their feet for the concepts that they like most. And I do think that this equity thing, and look, I think it's safe to say you guys were pioneers with it, right? And it was an interesting story that you had to explain in the beginning. And today, people are looking for it, but they're voting with their feet for the best models. And the best models seem to be the models that have the most flexibility, right? In other words, dead center of what I would say is everything is multi-platform, multi-custodial, and equity, right? That's sort of dead. And you don't have to have all those things to succeed, but sure, it would help.
I mean, we have all those things.
I know. I think that's pretty cool.
I would not take credit for Steward to be pioneers in equity. I think we were pioneers in equity the way we did it, which is
totally what I mean.
I have,
yeah,
as one of the co-founders and the CEO, I have zero additional financial benefit than anyone at this firm has.
But that's
unique. The way it should be.
But that's unique. Once I try to tell guys, because as you can imagine, I get every day inundated with emails and calls, whatever. But to try to explain to guys, if somebody can't explain to you what the equity is, it's, or it takes 20 minutes to say it's a tag along, you got this, and then if the sun sets here and in Peru, the prices of gold goes, is maybe you're not in the right place.
Right. Yeah, it's true.
It should be simple. And that's what I've always appreciated about the models. That's very simple. And I think having management and advisors aligned is a critical thing. And that's a cultural thing too, I would imagine.
Yeah, 100%.
So where do you see this? I mean, I guess 2 parts. Where do you see, Steward going in the future? Because as we just said, well, you got the multi-custodial, you got the multi-platform, and now, so what's sort of next steps, and growing it also with an eye towards what's too big or what's, what do you think?
Listen, I think for us, what we spend a lot of time thinking about, and we really get this from our advisors, which is what are the cutting edge tools, resources, products, services that you need to help you run the business more efficiently. So very fortunate to have an amazing leadership team. So we're looking at AI tools. We've already built something we call it StewBot, which is an internal search engine. Everything should have Stew in its name, Tony.
I get it.
So we're doing
that much for me to figure that one out.
Yeah, we've rolled out a lot in the area of alternatives this year, right? And some new opportunities for our advisors there as well. So I think that's always a real focus of ours is, do we have a platform that advisors are excited about? Do we have the tools and technology that people want? Being, an organization that's nimble, we believe in renting technology. So I don't have to build anything. I don't have anyone coding here. So if we take on a technology and it doesn't work out, we can shut it down. If we take on a
Yeah.
technology and 4 years from now it's extinct, we can get rid of it and get something
But
new.
isn't that a great lesson of having built one of these independent firms? If you recall, I remember, I'm not going to say the name of the firm, but it was Smith Barney. But I remember them telling me the phone on my desk, I had a Watts line. Maybe it was even Leg Basin back at the time, but at the same desk, the Watts line was $10,000. They kept telling me the phone was $10,000. I'm like, okay, it's $10,000 on my P&L. I get it. And when I started, Washington Wealth, I got the phone for free with the internet. Right. So,
right.
I mean, how much investment do you want to make in some of this stuff when it's clearly going the other way?
Right. I think the tools and technology, listen, I think AI is going to be amazing for the industry. And I think the industry, as you said, has always been way behind in technology, especially at the larger firms, because it's trying to turn the aircraft carrier in the bathtub. But I look at a tool we're looking at, which will be connected to our phone system, where it's going to basically take notes of every conversation. So if you think about the regulatory requirement, which is very appropriate, is, hey, Tony Sirianni is a client of mine. I have to demonstrate and make record of that Tony and I discussed his account with some regularity, and there's notes on the system. So we're looking at that, but then you take your compliance hat out for a second and say, well, hold on. If Tony says to Jim on a call, hey, Jim, I'm really upset because of the tariff issue, my account's down. If that's being recorded in writing, is that now a written complaint?
Right.
Right.
Well, there's a lot to be worked out with
right.
So
exactly.
AI, what happens if AI makes a recommendation, you follow it? Who gets the blame? Who gets commission? I mean, there's so many things. And I also see what's happening, and this is another conversation you and I will have about regulation and regulatory stuff. But you can easily see, a commission, Congress, Senate commission being angry that you're not using AI to help your clients do it, and being angry that you are using AI. Literally, what side you're going to come down? You both have a valid argument. So I think that's why advisors really need a firm where they have somebody. I'm assuming we're paying you to think about that.
Yeah.
Right? So,
yeah.
I mean that's what you want.
Well, yeah, that's one of the reasons we go back to M&A in particular is, what ends up happening is you have, Jim and Tony Wealth Management, and then suddenly we're a 10 or $12 million revenue firm and we have 20 people, and suddenly we're doing talent reviews and doing HR and payroll and why is the printer broken? So all those things then all of a sudden start slowing down your efficiency, slowing down your growth. And they really love with Steward the opportunity to say, hey, you're going to take over my payroll, my infrastructure, my compliance, my operation. But the equity is really, I think, the most important part, because it's a true culture of alignment, right? Everyone here is an owner, and that doesn't matter what your role is. It's truly everyone at the firm has equity. And so there's always that common thought of, is this good for the firm? Is it good for the partnership? Because everyone here is a partner.
It makes it a different feeling in the branches and everything else. You did mention something earlier that leadership, and I know you're bringing in some new people. Two parts. Tell us about some of the new folks you brought in, and then also when you do that, obviously culturally you got to be aligned, right? You don't want to bring a bull in a china shop, right? No problem. So how do you manage that piece of it too? Because as the firm grows, I mean, you don't get to 42 billion. It's not you and I sitting around, hey. You need buddies.
Call me if you need something.
Yeah, right.
No, we have brought in so much talent over the last few years in particular. So I think about Mohan Gurapakian, who runs technology for us. Gregor Maitland, used to work at Lincoln Financial at 5,000 advisors, the head of supervision. He's now our head of supervision. Right. Frank McDonald had a very prominent role at Merrill Lynch in their platform, and now he's running platform for us. Kirsty Eustace recently promoted to our CAO. She's been phenomenal here. So I could go on and on. I mean, promoting Jeff Gagnon to head of wealth management. Jeff was a home run for us. So I really think it's the team working in unison with a common goal in mind. And we talk about really, it's two things. And sometimes this surprises people. Number one is protect the firm. Yep. And number two is grow the firm. Everyone thinks there's this psychotic focus on growth, which there is, but number one is always protect the firm first. So you have to have people that think that way. And you're right, Tony, there's people we brought in that they brought to us the way they were able to behave or treat people at a prior firm, which is not the Steward way. And sometimes we realize that that's not a good fit. And you try to turn the lens on the camera and get it in focus the way it should be. And sometimes that works and sometimes it doesn't.
Well, that's everywhere though. You got to
Right.
end up with the right mix. That's the only thing
Right.
that's important, right? So look, believe it or not, that's 20 minutes or so already. So, future of the business, maybe final thoughts, not Steward so much, but just, in general, where you see things going.
I think the future is very interesting because if you look at the people that have built the practices that exist today, right? I look at them, and you were one, I was one, right? They are the hunters. They went out and built the business from scratch. They're hunters. And I think the industry, which is not a bad thing, is turning into, it's almost like, human nature and the history of humanity. We're now looking at more and more farmers,
Yeah.
right? So the CFP, the planner, the relationship manager, they're
Team
not
member.
right. They're not salespeople. They're not going to run out and market the business. So I think there's a cultural shift in what does an advisor profile look like. I think accreditation is going to be really important going forward. I think you have to have tools and technology because clients want it to be easy to communicate with you, easy to get information from you. But listen, the human interaction and trusting your advisor is always the cornerstone of any financial relationship. So that part I don't see changing, but I think it really will be interesting. And then listen, there's the shift that's really continues to report on, and this trend away from the big four firms where, their market share 20 years ago was north of 50%, and now it's in the high 30s. So I would say if you bought me a stock at 51 and it's trading at 37, how much am I down? I'm down 25%. So in a bull market with record productivity and record assets,
It's more than that because you imagine if they added in their revenue, all the assets that they lost.
right,
Because different
right,
advisors are different levels of
right,
productivity.
right.
You bring them, imagine if, their numbers would be enormous, but they
So I
don't
think it's,
look.
listen, I think it's tracking, they're going to track down to the low 20s is probably where they bottom out. And then I think the big three becomes the big four because they have to. It's the only way to create efficiency and scale.
Yeah, fantastic. All right, look, we're going to end on that, buddy. And it was great to see you. Thanks for being here. And
My pleasure, as
appreciate
always.
your insight as always.
You got it. Thanks for the time.
Thanks.